All right, let's do this over here. So bring this up and we're going to choose a random date generator. Perfect. All right, random date generator, and then we're going to choose a total of 25 dates. Usually when I do simulations, I don't want to go way too far back because, there are ways the market moves, right? And market dynamics change every 6 months, if not 6 months, every 12 months, the market dynamics change. So it's better to stick to the most recent market dynamics. So we're in June now, so we're just going to do June 2022 till, whatever, till like May 23, and 31st or 31 days there, and June has 30 days. We're going to do one. We're only going to choose Sundays because Sundays is when, you know, the market starts. All right, so we got a bunch of dates over here. We got January, February, March, April, May. Actually, let's do March. March 16th. My currently risk on risk computer. So yes, it was used this time. Hey, Rami, let's stick to simulation. Okay, everyone listen. Let's just stick to simulation over here, because questions like what risk should I do, or like, what clothes should I wear today, like those questions, anything unrelated to simulation is an irrelevant question. So you can ask that in the chat, you can ask that privately to me. Let's just do that, right? So let's just stick to simulation so we don't waste time. Right, so we're going to do 16th March. Let's do 16th March over here. So we're going to do new simulation, gold, 2023, March 16th, or what was it? March 16th. And we have gold, March 16th is Thursday. All right, so we'll just do 12th March. So we're going to start with 5,000. Let's say 5,000. Your close leverage is going to be 1 to 100. Commission right there. Spread, we're going to do fixed spread of 1.5 pips, which is 150 points. Commission per lot, whatever. History on the charts, we're going to see like 300 days and start. Okay, so we are recording. Beautiful. So we got this right here, and now we have to load up the charts over here one by one. So we're going to start with the daily, and then we're going to start with the 4 hour. We're going to start with 1 hour, 30-minute, and maybe 15-minute. I don't usually look at the 15-minute, but in this case, we're gonna kind of like have it there. So we're gonna open the first one, and then we have to change to templates. And template, we're gonna change to black on white. This is gonna be don't show grid lines, scale fix, perfect. Candle, zoom in, and do right here. So this is also very important, which you guys can do as well. And we're going to save this as default, right? Save. Now, if I open the 30-minute, it's going to be the same one right here. Take a look at this. Oh, probably not. Okay, default. 1 hour template, default. 4 hour template, default. Daily template, default. Perfect. Close this. Now, looking at the time, it's about like 6 p.m. Eastern, and we're going to go towards 1 a.m., which is going to be like 2 hours before London Open. What's this? Building Muscle and Wealth Live Conversation with Fitness and Forex. Oh, nice. Someone posted that video. 6 p.m. So let's go towards the 1 hour, 6, 7, 8, 9, 10, 11, 12, 1. Now we are at 1 a.m. Eastern, which is 2 hours before London Open. Looking at the daily time frame, so we can start doing our analysis at this point now. Looking at the daily, it's very easy to see that to the left-hand side we had some rejections. The daily candle at this point hasn't really gone bearish, so we're just thinking maybe that, okay, if we do go bearish, we may create a lower wick or whatever. But if you do think daily candle is going to go bearish, then we got to take a look at the smaller time frames to see if that actually makes sense. Now, looking at the 4 hour time frame, oh, we got to do one more thing over here. We have to bring this up, and we have to bring a rectangle right here, right? So we right click, customize, and find the rectangle, insert, close. There we go. This is our resistance. It's a little bit too blue, so we're going to make it probably a lighter gray, like that. And fill it. Okay. There we go. Perfect. Right. At the same time, we're maybe creating support, but let's take a look at the small time frames. Actually, let's just adjust this more. I have to make it a little bit more lighter. Like this. Perfect. Awesome. Let's take a look on the 1 hour time frame. Now, looking at the 1 hour time frame, we are kind of like consolidating here now. We've created a support. So basically, there was a gap, right? So price closed right here on Friday. And then when the gap happened, price opened up, like 50, what's this? 67, 68, 69, 70. Yeah, around like, 52 pips above. So there was a 52 pip gap from where price closed, and then price came down, created another support, and continued to push up. So now we have a support down at 1872, and we have a resistance at 1887. So this is a range we have, and this is a 150. Is this a 152 pip range from 1887 till 1872? Yes, 152, 53 pip range. So let's clone these over to the smaller time frames. Clone this. Let's go to a 30-minute time frame. This is now we have the 30-minute candles right here. So we are creating a range. Now if we zoom in, let's go towards and do scale fix and zoom in here a little bit. What we can find is that we did create a resistance, and there was a support created around 1882. And then we have this candle that closed below the support. So if a candle is right here closing below the support, I think there's a very good possibility that that price can probably continue pushing down. But if we think that next candle is going to push down, it needs to create a top wick, break this low, and then continue to push down, because now we have this clean candle. Sometimes when we take a look to the left hand side, we see, okay, well, maybe there was some sort of a resistance created right here, so maybe price can reject this area. That's a very valid thing to look at. But if this resistance was important, then maybe this candle moving up would have reacted to this area, but it didn't, because it created a clean candle at this point. So I think a better idea would be to kind of like, maybe just wait for this new candle to wick up, break the low, and then possibly continue pushing down. So that's what we're going to go with right over here. So we're going to wait to see if that really happens. If it happens, then perfect. If not, then, what can you do? All we can do is just wait. See this right here? We're creating like smaller little top wicks. Let's take a look on the 15-minute time frame. We're only 1 minute in. So even looking on the 15-minute time frame, we have broken below the support. And looking at the 1 hour time frame, 1 hour candle has a clean range to the left hand side. Looking on the 4 hour, 4 hour is one rejection. This is another kind of like a rejection. Is this rejection wick bigger than the body? This is 75 pips. The body is, let's see here, the body is 45 pips. So that is indeed a rejection. Let's take a look at the smaller lower wick right here. This is 46 pips as well. So yeah, so this is a rejection candle right here, the 4 hour candle, because the wick is bigger than the body. This one right here, it's bigger than the body, and it's bigger than the liquidity wick. So this is a rejection candle, which means that price should continue pushing down. 1 hour also maybe be a clean candle, but on the 30-minute time frame, it does seem like there's a probability we can continue pushing down. Since, okay, here's the thing. Let me break this down here very easily. What's the trend? Can someone tell me the trend? What's the trend? Up or down? Bullish or bearish? The trend is bullish. Okay? because the price is moving from the lower left corner of the screen to the top right corner of the screen. Trend is bullish, right? So price came up, created a high, came down, created support. If we created support, then at times of volume, we should have continued to push up, but we broke below support. So that is a really good condition for a sell. And I think that's where I think we should continue with a sell over here, which would make sense. Let's do a sell over here. I do think this makes sense. So 26 pip there, right here, probably going to aim for whatever right over here. Let's take a look on the 15-minute time frame. Yeah, I think that's a pretty good stop. So, yeah, so I guess we're going to go with the sell over here because, the conditions are met. So if the conditions are met, there should be nothing stopping price to continue pushing down if our conditions are met. And then slowly we can, this is this is like a 85 pip range, so we can easily get something out of it. Like we're already, is this 12 pips? What kind of volume there is in price right over here? So this is 1881 till 1880, 20. Yeah, I think so. 1881, 1883, 20, whatever. Okay, let's speed it up here a little bit. Yeah, I guess it looks good. We did break support in an uptrend, and now we're continuing to push down. This is a 27 pip stop. We've only moved like 14 pips at this point. Oh, we're coming up at this point now. This is interesting. 15-minute candle has closed. 15-minute candle has closed like a weak body. Looking at the 30-minute. See now, at this point, it's getting a little bit risky. So what we're going to do is we're going to close partials. We're going to close like, let's say, 50% and then leave the rest running. Right? Because candle is not doing what we expected it to do. So even if we lose, it's better to lose less than what we planned on losing. That's the beauty about managing risk. So here we are, we're going back in profits now at this point. The 30-minute candle is about to close, and as the 30-minute candle is coming to a close, we can probably bring our stop above the 30-minute candle, and yeah, just let the rest run. Because maybe that retracement was just like whatever retracement. Oh, there we go. The new 30-minute candle has started. We're coming up towards our entry point, and if we think that this candle can continue pushing down, we can probably have another entry with a smaller stop loss, right? For price to continue pushing down. And let's test that out. Nothing big, nothing big, just like whatever, like 0.5%. Nothing big, 0.5%. Have it right over here. Because if price is going to continue pushing up, it needs to break above the high. That's it. But if it respects the high, then it should continue to push down. But this is just saying that, let's say, for example, if you're taking a dynamic risk, that's where dynamic entries work the best because you're taking an entry as price is moving against you, but it's respecting the previous high, and you're trusting the fact that okay, as long as it respects the previous high, there's a very high probability it should continue to push down. Now it created that top wick, it broke below the previous candle, and as it broke below the previous candle, it's now making lower lows and lower highs, and price will continue to push down. But let's say if, so there are also different conditions as well. Like, let's say we had a candle like this right here, and then we had a candle like this, right? At this point, taking a sell right here wouldn't have been a good idea. And I'm going to tell you why. The reason why it wouldn't have been a good idea because price has already moved 1, 2, 3 candles down. Then you're basically saying that, okay, what's the probability that the next candles are going to continue to push down? And that's where a lot of guys lose money here as well, or basically like you lose trades here as well. But in this case, we didn't have that. We only had, okay, let's see. Oh, nice. We're coming down at this point. Anyway, probably going to close 90% right here and put stops or break even and take away the take profit, right? But in this case, we had one candle that broke below support, and now you can say that, okay, since we have one candle breaking below support, so there's a very high probability we can continue to push down. But if you had a candle right over here, a candle right over here, and a candle right over here, and a break below support, then taking a sell would have been very risky because the probability of price, doing this is higher at this point. The probability of price retracing and doing some sort of a retest is way higher. So it gets pretty risky at that point. So whenever you have candles that move down in succession, okay, so what we're going to do is we're just going to see whether we can do some sort of a retest or whatever. But whenever you have a candle that's moving against you after a succession of candles moving down, it's better to wait to see if we create, let's say, some sort of resistance, or if the candle closes bullish, to see if we can break below this low to continue pushing down or not to fill this clean range right here. But if we do create resistance, then we can say that, okay, this is a very good idea because we broke below support, price moved down, and if we create a resistance, we can take a sell to retest this low and then to potentially continue to pushing down in NY open, right? That's the first scenario. Second scenario is that if we close bullish and the next candle breaks the low, provided that this bullish candle is a rejection candle, and if we break the low, then we can continue to pushing down because we got clean candle to the left side, right? When taking a range trade, it should be, range should be at least like 25 pips, I'd say, like 25 to 30 pips. I think that's going to be a very good range. So this 30-minute candle is about to close very soon, right over here. 28, 29. All right, there we go. 30-minute candle has closed. Now, the way the 30-minute candle has closed, what can you guys tell me about this candle? Is this a exhaustion rejection candle, or is this a very strong bullish candle? Impulse setup, rejection candle, exhaustion. Yes, that is correct. So the impulse setup, we all know this, it's going to be very easy, right? If this candle, new candle, breaks below the low, it's a very, very easy impulsive trade. I think everyone can agree to that. I mean, for the guys who have done impulse trades, I think this is going to be a very easy thing if we break below the low. That's it. We just have to wait for the candle to break below the low, and then it just means all guns to the wall at that point. If we don't break below the low, then we're going to respect the low, and then we may continue to go up. So it's the same thing we talked about. There are two things that can happen. See, now we're breaking below the low. Very simple idea. 1.5 risk right here. Take a sell. Stops above this candle, and we're aiming for price to fill the low at the bottom. Simple. There should be no confusion. Nothing about that. we're also in the high volume time. We have pre-London. We have London Open coming up. So it's just a matter of time till we continue to push down when this candle breaks its own low and continues moving forward. Because if we measure this candle now, this wick is 30 pips and this body is 14 pips. So it's an exhaustion candle. So let's take a look on the 1 hour. So for this, we're not even looking at the 1 hour. We're just going to look at the 1 hour. Oh yeah, look at that. We're coming down. 4 hours also coming down. 15-minute is whatever. But the 30-minute is where we are getting that clear indication of where price is going. Right? Because without having these clear indications on this specific time frame, it's very difficult to identify where price is going to go. So this is actually very good. We have about 8 minutes left till the candle to close. And I think we should continue to push down. I think that should be a very, very good gain over here. The best thing I've done with 30-minute candles is to just wait for the 30-minute candles to close. If the 30-minute candles go against you, then you know that all you got to do is manage risk. But for the most part, you just gotta, let the candle flow. So we got 3 minutes left over here. We got London Open coming up. 1 minute left. And if we continue to push down, then that's beautiful. If not, then we're just gonna actually right here, I'm just gonna secure, let's say 90%, and then just gonna leave the rest running, stops at break even, take away, take profit. Perfect. What about that support on the left hand side? What support? You said that support. What support? If you're pointing at it, I can't see it because I'm not there. What about that support? Bro, this one? That's TP. Or this one? This one? This one? Which one? In high volume times when candle bodies are big, have you ever taken entries off the 5-minute time frame? No. Oh yeah, sometimes, yes. Yeah, what about this support? This is a support, so that's TP. Sometimes, yes, I have. So when there's, especially like, when the Russian-Ukraine thing happened, you can get really good scalp trades because the 5-minute candles are like, 20 pip candles, 15 pip candles. Your 15-minute candles are like 30, 40 pip candles. So in those times, yes, I have taken trades. Okay, so yeah, I guess we're at this area now. So I mean, is this trade still open? Oh yeah, this trade is open. Yeah, so we're at support. We're bouncing off the support. Let's just secure this whatever over here. So let's just see how this candle closes. Let's fast forward this here a little bit. Actually, let's not fast forward this. Let's just forward the candle. So we close like a small bearish candle. So this is what happened, right? I love looking at the 30-minute time frame. Price came down. One candle, two, three, four. Four candles came down. 30-minute candles came down. We're closing like a small bearish candle, which means the volume going down is decreasing at this point. Perfect. And if the volume going down is decreasing, and if we do create support, next candle, so we've created support with no wick at the bottom on this candle. So whenever you have a candle with no wick at the bottom, what does that mean? That means it's a very high bullish volume. Now I'm not going to execute on this, but it's better to just, kind of like anticipate where price can go. So since this candle closed with no wick on the bottom, and we've studied when a candle has no wick on the bottom, that means there's a very high volume and there's a very high chance the next candle can continue to go up. We're not going to execute on this. We're just going to anticipate it. Oh, nice. Look at that. We did move up. Oh, nice. Wonderful. Look at that. We did actually move up. So we're coming up towards, oh, wow. Look at that. We're continuing to push up at this point. So we've also broken above this resistance right here, and we're moving into what you call is the New York session. And let's take a look at this right here, sessions. All right, we're moving into pre-NY, and then we're going to have NY open at this point. And so since we're breaking above this area, so see, this is what I was talking about. So we had resistance. We have 1, 2, 3, 4 candles move above resistance. If you take a buy over here, that's a very asinine thing to do because you're basically saying that there's a high probability that after having 1, 2, 3, 4 candles moving up, the fifth candle should also continue to move up. No, you have to wait for retracement or maybe some sort of a consolidation and then look to see if price can move up. Oh, wow, look at that, right? We have rejection right over here. So we're moving into, New York session, and maybe when this candle is breaking below this area or breaking back below this resistance, maybe this could be fake out trade. That's absolutely correct. You have said it right, my friend. This could be a fake out. Oh, what's happening over here? Zoom is reconnecting. All right, looks like we had some sort of technical difficulty. Difficulty. Timeout. Yeah, timeout. So is the screen good? You're good? What's good thing it's recording anyway, so that's good. Okay, no response. Okay, screen's good. Awesome. All right, let's continue. Right, so 30-minute candle is coming down. As this candle breaks the low, we're going to do a fake out trade as it breaks the low of the previous candle. Yeah, right here. See, it's breaking below this low. So this is where a fake out is going to go in. And I haven't really traded fake out, so I'm just going to go with a lower risk just to kind of like, demonstrate that if it does work. Stop is going to be like, what's the stop loss? 28 pips, and we're looking at probably like the same 1-to-1, right? So yeah, that's where the fake out's going to go. There's a 15-minute time frame, at a 30-minute time frame. So I guess we could say that this could be a very good fake out idea right here, right? Because we broke above, this kind of closed back below resistance, so there's a high probability we can continue to push back down. Not all the way, but like, around like 20 pips, 25 pips. This candle is still open. Let's fast forward this a little bit. Oh, going up over here and going down. I'm not going to manage risk because my risk is already managed because I'm using a 0.25 risk at this point. Nice. We came down and rejected that area. Okay, let's just gonna say, oh, the spread didn't activate the take profit. Got scammed there by the broker. All right, new candle has formed. Ah, there we go. Perfect. That's what we were looking for. Anyway, good. Let's just forward this candle, 30-minute candle, and oh, look what's happening right here. Now, this is very interesting, right? And this is where, when a candle closed below support in a perfect setup, but with a bigger body, is it ideal to take the trade away from it? Bigger body, yes. So this was a bigger body right here. So you have to take a look at that example. The current candle confused me a lot. Yeah. So let's say we had a resistance right here. There's nothing to show on the 15-minute time frame. If there was something to show important on the 15-minute time frame, I would show it. But we had resistance right here, and now we're creating new zones, right? So since we're creating new zones, it's very important to adjust your areas based on the new zones now. Because you always have to refresh your zone. So if I say now the 30-minute has created support, we have a high formed at this point, and we have a, kind of like the momentum is going back in bullish. What's this range? This is a 54 pip range, right? Now we're going to take a look on the 15 minutes, see what's happening on the 15-minute time frame. Kind of like, the same thing is happening. We're creating a support, and we have, like a clean range to go all the way up. So I think there could be, in a New York session right here, I think this could be a very, very good idea to take like some sort of a buying opportunity as price moves up, but we're moving down. Yeah, so we gotta wait. We have to wait for price to go up. Take a buy. What's your advice in terms of finding entries that high volume time when candle bodies are very big, especially now and right? Yeah, just if the candle bodies are big, depends. If the 30-minute candle bodies are big, then take a look on the 15-minute time frame. That's the best advice. Oh wow, look at that. We basically didn't do what we expected it to do, right? Oh, now we're breaking above the high right here, right? So this will be an impulse entry right here because we created a lower wick, which is a liquidity wick. We broke below the previous candle, and now we're breaking above the high. So if we're breaking above the high after breaking below the low, so now you got to ask yourself, what's the probability where price is going to move? Because we went down, created a liquidity wick, broke the low, didn't move down after breaking the low, and now we're breaking above the high, so I think there's a very high probability we can continue to push up. So this is going to be a 0.5 lot, no 0.5%. It's a very big stop loss, which I don't really like. So it's gonna Just going to keep an eye on this. It's a very, very big stop. So we're going to keep an eye on this. The 15-minute candle is about to close. Let's take a look on the 15-minute time frame right here. 15 minutes getting a little bit jittery. Don't like the way the 15-minute is moving at this point. Oh, 15-minute candle closed bearish. So maybe this is going to be an opportunity to close 50%. Yeah, just manage risk. Risky trade, manage risk. What else do you need? Right? So whenever you can manage risk, that's the point where you can just put your hands behind your back and say, perfect, I've managed risk, and now I'm just going to let the trade go wherever it wants to go. That's it. We can have the TP all the way up over here for that matter. You know, it doesn't really matter. But yeah, 30-minute candle's open. Let's fast forward this candle. I'll bring it right over here. Who knows? Oh, nice. Look at that. Bullish candle. Looking at the 15-minute. Bullish. Oh, wow. Look at that. We're still moving over here. 37 pips. Almost 40 pips over. 46 pips. Next candle. Okay, whatever. 30-minute candle still open. The time is ending now to start the next day anyway. Oh, very nice. Look at that. We are at $5,000 over here. We have made a $243 gain today. This moved up. Perfect. Now let's move on to the next one. Right here. Oh, well, look at that. We still continue to move up. And we are at pre-London session now. Let's take a look on the 4-hour. Let's remove all zones. This one, this one. So see, we haven't really filled the gap here. Looking at the daily, daily is very bullish, extremely bullish candle. So you may expect we need a retracement. Looking on the 4-hour, we are creating a resistance. That's it. Maybe if you want to put one down over here, it doesn't really matter. Let's take a look on the 1-hour time frame. 1 hour is in a uptrend, and in this uptrend we are creating a support. If this candle makes a lower wick, then we can continue to go up. If we break below support, we can continue to push down. 54 pip range to the support right here. Let's take a look at this on the 30-minute time frame. Looking at the 30-minute, kind of have the same idea. We got support right here, and then we have another support down at this point. And this range is a very healthy 59 to 60 pip range. And yeah, I mean, I think this could be a very, very, very good trade idea. So we'll have to wait, right? So now price is making a lower wick. Beautiful. If we can break the high, we can continue to push up. If we can break the high, and that's all we're gonna wait for, right, guys? Make sense? Makes sense. So looks like we're breaking below the low. Perfect. If we break below support, then we can continue to push down. See, this candle is about to close. There we go. Candle closed bearish. Now, what's the probability that when this candle breaks below the low, we can continue to push down? All we got to do is wait for price to break below the low. There's a very high probability. High probability sell. This is where you do a 2% risk, right? Because you've made profit the previous day. All right. So looks like we're making that top wick. Dynamic on retracement? No, because we just moved up. So we gotta wait. I mean, it's up to you, but I want to wait for price to break below the low because we are in an uptrend. So you want better buying confirmations, selling confirmations. Oh wow, look at that. We're moving up now, and there's no bottom wick. So I think the tides have changed for price. Oh, whoa, look at that one over there. Yeah, it looks like we have rejected that area on the 1-hour time frame. So if we can break the high on the 30-minute, I think the tides have changed for price to continue to push up because this looks like probably like a fake out. Getting that, maybe making that lower wick or whatever. Let's take a look on the 15-minute time frame. 15-minute is also trying to push up, and this does look like a fake out because we broke below the thing support and we came back in the range. I guess so if we do take it, stops are gonna be like, okay, let's do like a 1% risk over here. 1% risk. Um, yeah, stops are probably gonna be. Okay, let's do this. I don't want my stops based on the 30-minute. I'm going to put my stops based on the 15-minute because on the 30-minute, my stops are 31 pips. I don't want that. I'm going to have my stops below the 15-minute candle, which is 15 pips. And the reason why is because if this 15-minute candle breaks its low, then I can manage risk, and then I can lose less than what I'm expecting to lose. Right? Oh, nice. Look at that. Good catch, guys. Fake out. Perfect. Just like the previous fake out we had, right? We're continuing to push up here now. Beautiful. Wow, look at that. 30 pips, 34 pips, 39, 40 pips. Probably gonna secure some right over here because we're coming up towards a. Now, I know this is a clean candle, but then there was a rejection right here, and then price has already moved like what, 50 pips at that point. So there may be some retracement happening. So we're gonna close 50%, actually 90%. Gonna close 90%, stops at break even, remove TP, and just, yeah, that's it. Let it run. Very simple move, right? Very, very simple move. Like, I think we're blessed that we're having this move now. Yeah, it's very nice. Candle still open, pre-London time, lots of volume, lots of healthy volume. Just past phase one, moving on to phase two. 8%. Very, very nice with this one over here. Yeah, just played out really nicely. Oh wow, look at that rejection, man. Look at that rejection. Very, very nice rejection. Let's move on to the next 30-minute candle, see what's happening. Oh, next 30-minute candle close with a rejection right here. Okay, whatever. Yeah, I mean, yeah, that was a very, very good trade. That was a very good trade. Lots of things happening at this point now in like for price. So I guess we'll have to wait a little bit to see whether we can create support to continue to push up. Creating support to continue to push up would be much better. 15-minute time frame right here, 1 hour time frame right here. Could be a wick fill, yeah, could be a wick fill, but I'm not gonna do that wick fill because we've already had a pretty massive move. Don't you consider about news events doing simulations? No, I don't. Like I'll take a peek at it, but I'm not gonna look at it like you know, London news, I don't really take a look at. News in New York are what I basically look at, especially for gold. Okay, let's move on to the next candle. We're going up over here still. Look at the bodies. Bodies are getting bigger now. Next candle. Oh, look at that. Body became smaller. What does this mean when a body becomes smaller after like a big move? Whenever you have a big move going up and the bodies start to get smaller, this means that the volume going in that direction is getting smaller as well. Take a look at the 15-minute. Yeah. Oh, it looks like that trade is still open. Let's close this right here. 30-minute candles coming down. The best idea would be to wait for price to create support, and then we can continue to move back up again. But yeah, ooh, wow, coming straight down over here. Next candle, rejection, next candle, next candle. Oh, wow. There we have a support formed. But realistically, after you're done trading a London session, you're not necessarily going to trade this New York session here either, like, because if you're done trading a London session, you're probably just going to call it a day. But like, at this point, you can just sit and watch how price moves. Like, we've created support at this point, so there's a very high probability we can continue to push up. Let's take a look on the 1 hour time frame. 1 hour candles are also I guess down, and we can adjust this at this point. This candle is also about to close. There we go. 1 hour candle has closed. Looking at the 30-minute candle is also closing bullish. So if you look on the 1 hour candle, we've created support, and what's the probability we can continue to go up? Would you say the last bearish candle broke the trend? There's no such thing as trend. There's no trend. Trend doesn't exist. What exists is where you can anticipate price to go. Like if you just look at these 1 hour candles, 1 hour candle went up to create a high right here. We created a high and we created support. What's the probability we can continue up to retest this high in this 94 pip range? What's the probability? This is a very high probability. So we're going to do with the 0.5 risk, nothing big, 0.5 risk. Stop is like, okay, TP is whatever. Stop is like, right down over here. And yeah, that's it. Like there's a lot of volume in gold at this point. Like I don't remember what was happening, but yeah, we created support on the 1 hour time frame. If you just take it based off of the 1 hour time frame, one out of two things are going to happen. Either you're going to hit your stop loss, or a higher probability setup, which is price to retest the high, is going to happen. So now you got to ask yourself, there's a low probability that you will hit your stop loss, and there's a higher probability that price will do exactly what it's supposed to do. That's it. That's trading in a nutshell. You have to execute on things that have high probabilities, right? So this is a 1 hour time frame. 1 hour candle has closed bullish, which is good. Maybe you can trail your stop now below this 1 hour candle, making it a little bit smaller. We've also broken above the high, bring it up over here, and oh yeah, see, so we managed our stop loss, but but price continued to go up. Was this news? Economic calendar is not available. Well, I guess we're not gonna know. But see how trailing your stop, we lost less, right? We trailed our stop below the lows in case something weird happens, so we don't lose what we planned on losing. So we lost less than what we planned on losing. Let's take a look at this previous trade right here. So we lost about closed trades $2. Yeah, we lost $2 over here, and our risk was like, I don't know, like $20, something like that, $20. We lost $2. We lost $6 over here. We lost $7 up over here. Our biggest win was a $142 trade. Let's move on to this the next day now. 1 hour. Yeah. Oh wow! Look at that consolidation. Nothing basically happened. Beautiful. Wow! Look at that. So what do we know about consolidation? The bigger the consolidation, the bigger the breakout, right? So we have some big move waiting to happen on gold. 4 hour. Let's take a look on the 4 hour. 4 hour time frame. We got to scale fix this. Scale fix up at this point. So now looking at the 4 hour, I think that this candle closed a weak bullish candle, which means that there's a very, very low volume to continue to go up. And I think if the next 4 hour candle wicks up and breaks below the low, we can continue down to fill this wick, 54 pips. Let's take a look on the 1 hour time frame and see if that makes sense. Looking at the 1 hour, we are creating resistance, and we are creating, well, we are at the support. Let's extend the support to the left hand side. And it looks like, yeah, there's the support there as well. So if this candle breaks below the low, we can fill this wick. Same wick from the 4 hour time frame, 54 pips away. Let's take a look on the 30 minute, see if that makes sense. We got to clone this over to the 30 minute time frame. Looking at the 30 minute, let's remove this, Let's adjust this down over here and adjust this resistance up at this point, which is 1904, 94, and 1900. So this is a 42 pip range. Looking on the 15 minute, I don't think this is a tradable range because based on the volume we've had on gold, we're just consolidating at this point now. So yeah, I guess we'll just have to wait. Because even if we break below the low on this bearish candle, We have 1, 2, 3, 4, 5, 6. 6 candles going bearish, right? So if we have 6 candles going bearish, the question is, like, how can you expect the 7th candle to continue going bearish? So we've broken below support, and that's the mistake people make. Like, if I were to take a sell over here, expecting this candle to continue going down, like, how much longer can these candles continue to go down? You know, like, I mean, that's the question. That's the that's the kind of question you always got to ask yourself. You know, how much longer can you expect candles to continue to push down? So this 30-minute candle is about to close. Like, I mean, if we can create a good support, I may say maybe we can trade in this range, which is 34 pip range, but yeah, I mean, we'll have to wait, right? Candle's about to close, and this candle is about to close in 3, 2, 1. Bearish candle. Oh, wow, wonderful. But the bodies are getting smaller. So what do we do? What do we do now? We wait. For what? We wait for a sign. We wait for a sign for a strong support to form, because let's say if we form a come on, man. Okay. Let's say if we form a support right here, now our range is getting bigger, right? Because now our range is like 48 pips. There we go, 30-minute candle is closing. We closed another bearish candle at this point. Oh my God. What's happening over here, man? We're coming closer to this wick here as well. There's a lot of waiting involved now. So one big lesson that we're going to take away from this simulation is going to be whenever you have candles moving one way and oh wow, look at that. So we're about to break the high over here, which means we're creating support. Beautiful. But this candle's way too big. Now we gotta wait. Candle has closed and we've created support. Now, how do we know whether this is a rejection candle or this is a good solid candle? How do we know that? Let's measure this wick. This is a 20 pip wick and the body is 13 pip body. So this is an exhaustion candle, right? 15. Oh wow, look at that, 15-minute. Really exhaustion candle right there. Let's take a look on the 1 hour. 1 hour is small bullish candle. So I don't know, we'll need like some sort of a bullish candle right there. I mean, the buys, I don't trust the buys over here, to be honest. You know, I don't like the buys. I don't trust the buys. I don't like it. I don't like the buys here at all. Like we're moving into London Open now. There has been no volume at this point. Candles are just doing whatever. I mean, of course, we're filling the wick over here, but it's unless we don't break the high, it's very, very risky. Very risky, extremely risky. I just don't trust it. I mean, if we break the low, then we can continue pushing down its 33 pip range, which is awesome. But other than that, I just don't know. This candle's, oh wow, look at that. We're breaking below the low over here, boys. Can we take a sell at this point? Impulse entry? We're breaking below the low, but the candle is about to close. Wajahat Khan, Marlon sells. Okay, let's do a 1%. Like we've made about 8%. Yeah, we've made 8%. We could risk a little bit more now because we made 8%. We can have, so if I have my stop above the 30-minute candle, this is going to be a 40 pip stop, right? It's a very big stop loss. So we're going to have it based on the 15-minute, which is a smaller stop loss. And probably going to, oh, I forgot to do this. 30-minute, probably going to have it right down over here, you know. Yeah. Yeah. Makes sense. Perfect. Oh, damn. Retracement. Retracement. Oh, there we go. We've closed below support, which is good. We've created, now we've broken below the low. We've made a top wick, broken below the low. So 22 and 31. Yeah, still pretty good. I think this is a very good trade over here. We should continue to push down. 15-minute candle has just closed. We closed whatever. and yeah, I hope just the volume in the London session is pretty nicely coming in now. Oh, nice. Look at that. 16, 15, 15 pip, 19, 20. We're coming up to a rejection area, and we don't know whether price is going to continue to push down or whether it's going to, like, reject. That's something we don't know at this point. So I guess as the candle comes to a close, we're just gonna, yeah, just gonna close, like partials right here, close like 90%, and that's it because we don't know where price is gonna go or whatever. So we're gonna put stops at break even and yeah, remove the TP just like at any time and yeah, that's it. Out of this consolidation, man, it was pretty tough. Oh, where's the price going now? What the hell's happening? We got clean range looking at the 4 hour. Oh, damn, look at that. 4 hour got clean traffic over 60. Damn. Looking at the daily. Daily is also. Oh, yeah, I think this is where we're getting the daily candle retracement, right? This is where the daily candle retracement is happening. The 15-minute candle has started. Wow, we've moved a lot. We've moved like 66 pips over here. That's a massive, massive, massive move. Look at this trade. It's running at about 80, 90, 97, 100 pip profit overhead. So this is where the runners, they continue moving. You're like, oh man, my runner moved a lot. Yeah, that's sick. Yeah, let's close this right here. I don't know because the retracement is going to happen here soon. So let's close this. Oh, continuing to move. Gold moves like a Ferrari on a highway. That's correct. And it's Sunday here as well, so there's less traffic today. So probably going to take the Ferrari out anyway. Yeah, that's crazy the way we moved. So, yeah, that's pretty nice. Look at that. That's a great move over here now. I mean, since we've had this 130 pip move, I think there could be some buys happening later on for price to potentially retrace a little bit, right? And that, yeah, we've created resistance on a 15-minute time frame. And we're going to try this over here. Well, we're not going to try this. I'm going to do it, and then we're going to kind of like, try to explain. Because we've created resistance. 15-minute has like a 94 pip range for price to cover, right? If you got a 94 pip range and the retracement could be like 20, 30 pips, I think that's worth a shot, right? I honestly think that's going to be worth a shot if we can get that. But anticipating price to continue pushing down after doing a 130 pip move, I think that's not a good idea. Because price can only move so much in one direction before it starts to retrace a little bit. So let's forward this to the 15 minutes, see how the 15-minute candle closes. 15-minute candle closed bullish right here, which is pretty good, I'd say. Let's take a look on the next one. Next 15-minute candle also closed bullish. 30-minute candle closed a very strong 30-minute candle. 1 hour candle is also bullish and it's open. 4 hour is whatever. Yeah, I think we can take like a 0.5, 0.5 risk. 0.5 risk buy. Same idea, stops below the 30-minute time frame. This, whatever. Actually, we're going to remove the TP from this right here because it's a 0.5 risk, right? What's 0.5? What's 0.5 risk at a 10% gain? Like if you've had a 10% gain, what's 0.5? Nothing, you know? It's nothing, but at least you're in a trade. So if you're in a trade, you can just be like, okay, let's put stops at break even. Now you got a free trade. Now you got a free trade, and I mean, if it continues to push up, which is, oh, damn, look at that. It's running at about 50 pips. I'm going to close, like, it's 0.5 risk. Let's just close like 50%, whatever. Yeah. 90 pips. Wow. I don't remember this happening to gold in March to be honest. I don't remember this at all. Let's move on to the next one here. Oh, what's this? Complete rejection. Oh, where's gold going? Oh, wow. This was just a very, very, very small risk. But man, this is at 300 pips. Was this Russia and Ukraine? No, that was last year. This is. No, this was. No, this wasn't. I don't remember. No, it wasn't. Wow, that's crazy. 0.5% risk and we've made 4%. That, oh, this thing is still going up over here. I'm going to just close this. Didn't catch this live, to be honest. It was a very, very small. If you missed the first big bullish candle, would you have tried to enter on the second one, third? No. Nope, not at all. If you've missed the first one, entering after this, no, because we don't know, you know? That's the thing, we just don't know. So if your entry wasn't here, then don't take an entry, just sit back and just let price play out. Oh yeah, wow, that's nuts. All right, let's move on to the next one over here. Move on to this. So this is the last trade that we're gonna do. And yeah, so let's take a look on the daily. So daily is very, 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 very bullish at this point. This daily candle is retracing, doing whatever, you know, like whatever. Let's take a look on the 4 hour. 4 hour made a high right here. And looks like we're rejecting or whatever. Let's take a look on the 1 hour time frame. Looking at the 1 hour time frame, we are creating a support, right? And we have a high created, but this 1 hour candle is closing with a small body, which means bullish momentum may be dying. But even though if bullish momentum is slowing down, and if we're looking for a sell, we need price to break below the support to continue pushing down. Let's take a look on the 30-minute time frame. Looking at the 30-minute time frame, we have some more information. We have a support formed. We have a resistance formed right here. Support and resistance formed. And at the same time, if we break above this resistance, then there's a very high probability we can continue to push up, clean range, almost like a 100 pip range. And if we break below the support, then we could potentially continue to push down. And this is the last trade that we're going to take here in this simulation here today. So let's see what happens. This range is like 32 pips, whatever, you know, but we have bigger moves outside of this range. So I think it's going to be better to kind of like wait for those bigger moves. So now we are on the live account of the funded challenge. And we have passed phase 1 and phase 2. Oh, look at that. This candle is breaking above the high. 15-minute candle is about to close right here. 15-minute candle has closed. This 15-minute candle is retracing. 30-minute. So we're gonna do some. So we're gonna do some. Man, I want to say that we're gonna do some advanced entries. But for that advanced entry to work, this 15-minute now has to break above the high. Yeah, right here. And this is also the breaking above this high right over here as well. So since this is the last trade, we're going to do 2% risk. Focus on a buy. Stops are going to be somewhere down over here. TP, obviously, we're going to take a look at maybe if we can get towards, 19, 18 area, whatever. Yeah. Looking at the 1 hour, we're breaking, oh, I thought we broke above we're breaking above the 1 hour high, so now it's good, right? We got a clean candle now. So the main idea has been for the trades to run has been only when you have clean candles to the left-hand side and trusting the higher time frames to continue pushing the price towards where you want price to go. That's been the main objective of this live stream here today. And also coupled with volume and the ferociousness of price movement in gold, coupled with intelligence of a trader, we have managed to secure 17%. All right, coming up towards Ah, very nice. Very, very, very nice. Made about $1,000 in this trading day. Experience, man. It's not about experience, to be honest. It's about waiting for price to create candles which you recognize. That's all what it is. Waiting for price to create candles that you recognize. That's it. There's nothing more to it, to be honest. That's been the key at this point. Awesome. So thank you guys for joining. I do appreciate it. This was recorded. The recording is going to be in the database in about 3 or 4 hours. It has to buffer to 4K quality. We did a lot of things here: impulse entries, volume times, clean ranges to the left hand side, and I hope this was helpful and we can smash next week, which is going to be an amazing week, I think. So every time we do a simulation, I think it's a good feeling because every time a new simulation happens, there's this new I would say like a new type of hope that we get that okay, maybe the next week like it's going to be better because all we got to do is just wait for price to create candles that we recognize and just execute. So take care everyone, have a great weekend. We're going to see you on Monday. And happy Father's Day to everyone celebrating Father's Day. Happy Father's Day. And happy Father's Day to people who are gonna be your fathers, who are not fathers yet. Just don't plan on being one. Because having little kids just destroys your life. Just joking. Have a great weekend.